Okay, good morning, folks, and welcome to a quick morning update. It's 6 a.m. here on the East Coast, and roughly about a half hour ago, the futures markets began to roll over. What you're looking at right now are the S&P E-mini futures, and you can see on this daily chart, we are probing a support level. We haven't broken it yet, but we are pretty weak here. 4-hour chart, you can see that in this 4-hour period, we have broken down below the 20-period moving average. We are testing support now. And as I've been discussing with members on Market Wrap, which is posted on the website, the VIX has been rallying for the past 4 days along with the S&P 500, which is not supposed to happen. So we've had institutions buying up insurance on the S&P 500 for several trading days now, and we've been on top of this, and so this is no shock that we may be seeing a bit of a sell-off begin here. The proximate cause of that event, yields are rising. The markets took it well today, but events out of Japan overnight are forcing bonds lower here, which in turn is forcing yields higher here in the United States on rumor that the Japanese central bank has already begun some sort of a removal of accommodation of their very, very long-term quantitative easing. As far as I know right now, it's rumor, but that rumor is significant enough where it's sending our markets lower. Now, you can see that we're beginning to rebound off of the support level. So our low here is 2737.25 on the day. Let's watch and see whether or not we roll over and take out that support level, because if we do and we close down below it, we're going significantly lower. Now let's take a look at the dollar. We've been speaking a lot about the US dollar over the past several days. It has been acting strong. We are long of the precious metal names, so we've been somewhat on the defensive the past couple of days. But the dollar is in a long-term downtrend, and I believe that given the current price action that we are beginning to see a resumption of that downtrend. I have been of the opinion that the dollar rally these past couple of days has been a bear market rally, a head fake, and I think that head fake is now beginning to fade. And if you take a look at gold, gold is up at current $12.30 on the day. It was even higher at one point in time. And if you take a look at it on a weekly basis, we are poised to head considerably higher because we had retested support earlier this week. We have now recaptured support, and we appear poised to press higher on the week. So we were buying the gold miners yesterday on that pullback and a retest of weekly support. So we're kind of satisfied that we did that. Members, congrats if you joined in on that purchase. Let's take a quick look at the Japanese yen futures. And this is what's causing all of the trouble with the US dollar. The yen, this is a weekly chart. Take a look at this weekly chart. This is a bullish engulfing of last week's move. A very, very powerful move, assuming that we close out the week where we are trading right now or higher. Now, on an intraday basis, let's go to a 4-hour chart. You can see that we have really begun to press higher here. We are a bit extended intraday relative to this 3 standard deviation Bollinger Band, but net, after a pullback, we stand poised to head significantly higher on the Japanese yen, which in turn will be bearish for the US dollar, which continues to weaken as I speak. Now let's segue into our members stock chart request. This is where I spend some time reviewing the symbols that our gold members submit for me to review on video. It is part of their membership. Okay, let's begin with a couple of charts for fellow member Fran. Fran is considering booking some big-time profits on TXN and CSCO systems. And congratulations on this trade. And what we're looking at here is a weekly chart of TXN. Now, on a weekly basis, we have RSI at 85.18. We did break out above resistance the week of January the 2nd, and we did so on volume. Now, I believe that this is a long-term trade with big-time capital gains on TXN. And the question that Fran has for me, is it time to think about booking some profits on TXN and then rotating into another sector? Now, let's keep in mind, I'm going to take this from the first person, meaning from my perspective, because I don't understand the big picture of Fran's financial situation. I don't understand other investments, debt, real estate, assets, tax liabilities, losses carried forward, etc. So I'm going to take this from the first person perspective because it would be irresponsible for me to make a determination on behalf of Fran. And anybody who provides advice without knowing your entire financial picture is being completely irresponsible. I will not do that, and that is to protect my members. So from a first person, how do I see the shares of TXN moving forward, and what would I do if I had a long-term capital gain? Well, I see that there are emerging sectors that are breaking out. So I like those sectors a lot. So let's assume that I have a small cash position, little to dedicate towards those emerging sectors. And I had a large percentage of my portfolio in TXN and in Cisco Systems. Now, that being the scenario, I have Texas Instrument, which is in a long-term bull market. It has no sign right now of subsiding. I see no technical breakdowns here. However, the shares are overbought on a weekly basis with RSI at 85.18. They can go higher, but it is overbought. Stochastics are trending higher. Volume so far this week, it's very early in the week. We have 3 trading days left to go, so we can't really rely upon volume on a weekly basis. Possible double top here on ADX line. And we have MACD histogram making lower highs. So the week isn't over yet, but we're seeing signals that we may, just maybe, losing a bit of momentum. And given the overbought nature of TXN, my gut tells me that it would be wise if I had a large percentage of my portfolio in Texas Instruments to begin to lighten up on that position while we have a lot of liquidity. And if you take a look at the chart on a monthly basis, we have RSI at 87.03. Now, the last time we were at these levels on RSI was back in January of 2000. The following month, which was February, we saw a top in RSI in terms of a closing high on both RSI and on price. The following months, we began to fall apart. Now, that was a tech bubble with a lot of momentum. I would say that there was far more momentum at the back of technology back then than what there is right now, given year 2K. For those of you old enough to remember what was going on back then, plus the dot-com mania, everybody wanted it on tech. I don't think that we have that right now. Me personally, going by the monthly and weekly charts, I would really consider scaling back if I had a good portion of my net worth in simply TXN. Daily chart. Now on the daily chart, we have RSI 83.42, topping action here, meaning that we have some sellers moving in, booking some profits. Volume is still good to the upside. And much as we saw on a weekly basis, you're seeing MACD histogram putting in lower highs now. So we're beginning to lose some upside momentum. So me personally, I would begin to start scaling out of Texan. Back to the weekly chart. I'm of the mind whereas I would book profits on half of my position, use a trailing stop loss order, and allow the markets to take you out just in case there is more upside. And if there's downside, you have a known downside stop. And Fran, as I've been mentioning on our members' commentaries, if I'm accurate, and we are setting up for a correction in the markets, that capital in cash will allow you to segue into other sectors that are emerging in 2018. Energy, emerging markets, precious metals, etc., and you'll be able to diversify your portfolio. Now, the next chart up is Cisco Systems, which is another position that Fran holds, and it's a large position. So again, we're going to start with the high level view, the weekly chart. In fact, you know what? Let's go with a monthly view and we'll drill down, because this is an important conversation that we're having here. Now, unlike TXN, we're not as overbought here on Cisco Systems. We are in quite the bull run. The indicators are looking strong on a monthly basis. We are quite extended beyond the 50-period moving average. Volume has been very, very light and declining on Cisco Systems. And that could be just because it's simply not the trading player in terms of stock market vehicles as it once was back here in 2000s. Weekly chart. So on a weekly basis, we are at RSI 80. It can move higher. We are very extended beyond this 50-period moving average. Volume, again, is declining. MACD histogram declining. So we're beginning to see a loss of momentum. Daily chart. On a daily basis, an inside day yesterday on volume. Volume rose. So I would think about booking some profits here on Cisco Systems. Again, going to cash, and then think about redeploying some of that capital after this beautiful bull run. And congratulations on your trades in Texas Instruments and Cisco Systems. But I think now is a time where you want to begin to scale out of some of these positions after a massive bull run and build a cash position. And then as we begin to see pullbacks in the sectors that we're watching, and then for them to begin to emerge once again for that second leg up in 2018, that's when you'll want to think about redeploying capital in other areas of the economy. And by no stretch of the imagination am I saying sell all your position on Cisco Systems. I'm just saying I would personally lighten up a bit and redeploy that capital because of what I know to be other areas of the economy which are emerging and which provide better risk to reward opportunities. Fran, I hope this helps. Let me know if you have any other questions. The next series of charts up for Pablo's SunCoke Energy Partners, SXCP, a beautiful chart, absolutely stunning. This is a weekly chart, love it. We were in a long-term triangle formation. We broke out several weeks ago. Now this week we have a follow-through week to the upside. There's nothing not to like about this chart. Volume is set to at least meet the moving average. Rising Stokes. We broke out several weeks ago on RSI. Actually, several months ago now on RSI. So we had an indicator which we see frequently. I talk about this often. We had an indicator, RSI, lead price performance. We broke out here the week of October the 9th. We pulled back, retested the breakout point. It held, and it wasn't until the week of December the 26th that we broke out on price, and RSI was already off to the races. So this is the value of using charts. Daily chart. On a daily basis, love it. A clean breakout. We may get a pullback. I think that you could buy that pullback. I'm loving this chart. Longer term. Shorter term, we may get a pullback. But I think that they will buy up the shares on that pullback. Anglo Gold, AU. I'm using a monthly chart here because it's such a noisy chart on a daily and a weekly basis. I think that this is going to be a good day for AU because of gold rising. In fact, let's go and revisit the chart since I last spoke about it. All right, so here you have it. We're slightly off the highs of the session but a good day nonetheless. We're watching for gold to take out 1327. If we close above that level, we're going a lot higher on gold. We're just shy of it right now, but we are overbought on an intraday basis. Back to the chart of AU. So what I would be looking for here is a breakout above $11.03 and a close above that level. If we get that, I think we're heading up to 1321. Here, on a close above that level, I would buy more. And a rally up and through $19.34, I would buy more. I'd be a buyer on strength here of AU, much as what we're doing with our other commodity plays. We're waiting for breakouts before we add aggressively. Daily chart, we pulled back. We are consolidating here. If you're long of it, I see no reason whatsoever to sell, but I'd be a buyer on a breakout again above 1103. The next chart, UAN, CVR Partners, weekly chart. We can't buy this stock right now because we are bouncing off of a resistance level. I'd be a buyer on a close above $4.01. We are putting in higher lows on price, which is bullish. So the stock, which has been in a downtrend, it is attempting to break out of this downtrend, but it hasn't done it yet. We do not have higher highs. We have higher lows, but no higher highs. Now, RSI is implying that we're going to get those higher highs. So I would show some patience, wait for a close on a weekly basis above $4.03. Then I would be a buyer. You saw some really good institutional buying last week and a few weeks ago as well. So you're seeing some big funds, banks begin to nibble on UAN shares, which is money, right? We want to follow the money flow. And note how this 50-period moving average on a weekly chart has been acting as a declining ceiling. That declining ceiling is at 3.93 at current. Where do we close yesterday? 3.95. So we're seeing the price action begin to improve, but it's still a show me stock, meaning it still has to show us that it has the strength, the backing to close above resistance at $4.03. That's when I would buy it on a close above that level. Wait until Friday. Daily chart, a bearish reversal day yesterday. We may pull back, fill the gap here at $3.08. But again, I would use the discipline of buying at a close above $4.03. TMUS, T-Mobile, a widely known name, weekly chart. We broke out the week of December the 18th out of a bull flag formation. I think this stock is a buy on a longer term basis. We are seeing some selling pressure. We'll go to the daily chart in a moment as buyers from back here sell to get made whole once again. So we have overhead supply back here, which we'll fight through. We have a breakout on RSI, a breakout on Stokes. Volume is very, very light on this breakout. I mean, I think we're on par to take out last week's volume bar, the high of last week, but it's going to be very, very difficult to meet even the moving average for T-Mobile this week. And one point I'll make here is that Ultimate Oscillator is putting in lower highs. We don't have a breakout yet. Daily chart. All right, so we had a continuation breakout on the 8th, a follow-through day yesterday up and into the third standard deviation Bollinger Band in red. Then sellers moved in. It's a bit overbought here. Allow for a pullback, probably a retest of 66, 76. If it holds, you could look to add more with a stop right below. Give it some room. I would anyway. Give it some room. If we close back down into this trading range, I would stop out of the trade. And I would look to add more on a rally up and through 68.88. Next chart up, Max Linear weekly chart. We broke out on a weekly basis the week of January the 2nd, a follow-through week this week. RSI moving higher along with Stokes. Good stuff. How's our volume? Very light. Ultimate oscillator, not breaking out yet. Not validating the breakout on price here. Daily chart. The daily chart is looking good. We cleared resistance yesterday. We will have resistance through the 27.51 level up to 32.47. You're going to need to see some volume here. The lack of volume makes it susceptible to sellers who bought back here now wanting to get made whole. So I would stay small with this position until we got up and through 32.47. And if we break down below 24.53, as a trade, I would look to stop out of the position. And that's it, folks. Members, we will be talking about the markets this evening on Market Wrap. Everybody have a profitable trading day, and I'll talk to you soon. Be well.